What types of bankruptcy can discharge student loans? If you are struggling with student loans and wondering if bankruptcy could help, you are not alone. Many people face this tough decision. Let's break down the types of bankruptcy that might allow you to discharge student loans. The two main types of bankruptcy are Chapter 7 and Chapter 13. Chapter 7 bankruptcy is often referred to as liquidation bankruptcy. In this process, your assets may be sold to pay off creditors. However, student loans are not automatically discharged in this type of bankruptcy. To have your student loans discharged, you must go through an additional legal step called an adversary proceeding. This means you need to prove undue hardship. What does undue hardship mean? It means you must show that you cannot maintain a minimal standard of living while repaying your loans. You also need to demonstrate that this financial hardship is likely to continue and that you have made a good faith effort to repay your loans. Recent changes in policies from the Department of Justice and the Department of Education have made it easier for some borrowers to succeed in these adversary proceedings. This is especially true for federal direct loans and direct consolidation loans held by the Department of Education. Now, let's talk about Chapter 13 bankruptcy. This type involves creating a repayment plan that lasts from 3 to 5 years. While it is still difficult to discharge student loans in Chapter 13, you may be able to partially repay them based on your income and expenses. After completing the repayment plan, any remaining eligible debts, including some student loans, might be discharged if you can show undue hardship. It is also important to know that not all student loans qualify for discharge in bankruptcy. Generally, only certain federal loans, like direct loans, are eligible. Private student loans are usually not dischargeable unless they meet specific conditions. For example, some private loans may be discharged more easily if they exceed the cost of attendance or were taken out for unaccredited schools. The bankruptcy process for student loans involves additional legal steps and documentation. You will need to file an adversary complaint and provide detailed information about your income, expenses, and payment history. Discharging student loans through bankruptcy can impact your credit score and may affect how financial institutions recover their funds. Banks and credit unions must carefully assess your financial situation and the legal framework when dealing with student loans in bankruptcy. In summary, both Chapter 7 and Chapter 13 bankruptcies can potentially discharge student loans, but you must meet the undue hardship standard and complete extra legal procedures. Federal direct loans are the primary loans eligible for discharge, while private loans are rarely discharged unless under special circumstances. Understanding these options can help you manage your student loan debt more effectively.